Good morning. Welcome to Trading Hour. I am Reema Tendulkar with Mia Pavitra Parekh and Sumaira Abdi. Good morning, girls. Good to see you all in white, pretty. For the markets, a quick check. In terms of numbers, we opened below that 17,500 mark on the Nifty. From that level, we've managed a recovery to now 17,650. We're still down 0.6% on the benchmark indices, but we're off from the worst levels of the morning. Asian markets continue to struggle. In fact, we are resilient compared to the rest of the Asian pack. Hang Seng, Nikkei, Korean markets, Taiwanese markets are all down between 1.5% to 2% this morning. It's the auto index where we're seeing big gains. The Nifty auto index is at a fresh 52-week high. Bajaj Finserv has been a big mover. It's rallied today, and this week itself, in 3 trading sessions, Bajaj Finserv has gained close to about 7.5%. And on the losing side, it's IT which continues to struggle. The Nifty IT, a representative of the tech stocks listed over here. The Nifty IT index is down 1.7%, with TCS and Infosys showing you cuts in excess of 2%. Hi.
Hi, good morning. So you were talking about the auto pack, and we were talking to Bajaj Auto this morning as well, and they're sounding so optimistic on demand. In fact, they're saying that a lot of the supply side issues as well, the chip shortage has eased. They're now not dependent on a single source, and that they do expect their market share to pick up as well. So that's a big positive that came through from Bajaj Auto. In fact, a lot of these stocks are sitting at fresh 52-week highs. So whether it's a Bajaj, Maruti, TVS, Leyland, all of them doing well in trade. On the downside, you have some of the consumption names which are seeing some cuts right now. So that will be up for you. Tata Consumers in the green, but the rest of them seeing some cuts right now. So the likes of HUL, Nestle seeing cuts, and the Adani group of stocks also in under some pressure right now in an otherwise okay looking market. So some of those names will be up for you, the likes of Adani Transmission, Total Gas, and then of course there's a whole slew of news flow coming in on stocks like SpiceJet, Biocon. So do keep those on your radar as well. But Sumaira, considering that we've got a 160-point recovery from the lows, I think we should take this. We did have a 350-point cut on the SGX, so this looks quite good.
Yeah, we'll take it with both hands, I guess. So let's get to our top story right away. Zee Entertainment is on our radar today, and that's on the back of some news that has come in. The company has signed a licensing deal with Disney Star for the ICC men's cricket events. Meanwhile, the Zee Entertainment stock is under some pressure amid CCI concerns around this deal over the proposed merger with Sony. My colleague Mangalam is here to fill us in on all the relevant details. Mangalam, morning.
Good morning. So 2 things that are affecting the Zee stock today. The first one is ICC and the second one is CCI. And as we speak, CCI seems to be, weighing higher on the ICC development. Let's talk about both of them one by one. ICC, on late Tuesday evening, we got the update that the company signed a licensing deal with Star as well as Disney to go ahead and air on its linear TV channels all the ICC men's tournaments between 2024 and 2027, which includes the 2027 50-over World Cup. We have the Champions Trophy and a couple of T20 World Cups as well. So that does well for Zee for a couple of reasons. One, while they haven't disclosed the financial details on this deal, analysts believe that payments for such syndicates have to be staggered, so they won't impact their bottom line as much. But importantly, what it does is it fixes a missing piece in the overall bouquet of Zee and gives them a sports mantle to show for in terms of 2024 to 2027 as far as cricket is concerned. So that should have been a positive. But what's weighing down on the stock in today's trading session is the news that came in that the CCI has asked for a couple of more clarification points with regards to the merger between Sony as well as Zee, and this is after their initial findings. So this was a Reuters report to which Zee has gone ahead and responded, saying that the article claims data from FY21, before FY21, which suggested that the combined market share of Zee and Sony was over 40%. But now the latest BARC data reveals that the combined market share is about 36% itself, and the concerns that they have are only basis initial findings, and this conversation is a continuous process. So as a result of which, they will engage with the CCI, and they don't believe, including the analysts, they don't believe this to be a big problem as far as the merger, the future merger between Zee and Sony is concerned. But until there is clarity that emerges, this continues to be a bit of an overhang on the stock.
Thank you very much, Mangalam, for laying the turf for us. To discuss this in greater detail, we're now joined by Abneesh Roy, Executive Director, Institutional Equities at Edelweiss Securities, on the show now. Abneesh, morning. It's a pleasure having you here with us. Before we get chatting about the Zee-Disney deal, wanted to get your thoughts in on the CCI overhang. Do you think it'll be a big concern? Will it, bring about big hurdles in the Zee-Sony deal? Explain it to us.
Sure, thanks. Yes, one positive news, one negative news. Clearly, positive news will be more on a 18 months to 4 years perspective, while the negative news is more near term. So yes, on the CCI, there are three key things. One is, as of now, it doesn't seem to be a big overhang. It is slight overhang. Investors are currently grappling on 2-3 issues. Where how much does this delay the process? And is there any channel reduction which the merged entity will have to do? If we see the numbers of market share, which Mangalam also highlighted, currently, if you see, there is a competition from Amazon, Netflix for the TV channels. So when you just see a TV market share, you're ignoring the OTT market share also, because customer obviously now has moved on. In the last 2 years, customer has moved on. There's huge disruption. Coming back to TV channel market share, if you see the numbers, clearly the merged entity has lost market share. And this is a dynamic world, right? Market shares are going to be dynamic. But if you see in each of the 4 genres which CCI seems to have mentioned, the market share of non-Zee, non-Sony is at least 63 to 73%. Apart from this, NTO2 still is a big overhang on subscription. So my sense is bargaining power doesn't really increase too much. But yes, investors will be concerned on time and whether the number of channels, any change would need to be there. But yes, H2, we do expect the advertising revenue to come back, which is a positive for Zee and all TV channels. One last point is essentially on the time. If you see, NCLT approval will take further 7 months. So CCI is happening in parallel. And my sense is 7 months is a long time for CCI and Zee-Sony to sit together and see how the data is and to address the questions which CCI has. Yes.
All right, got it. So it's not necessarily, of course, that, there will be any delay on account of just the CCI investigations and the concerns. But Avnish, thanks for joining us. This is Pavitra. You've mentioned in your note that the CCI may propose a slight change to some genres in which the market share is high. How do you expect this will play out, if, in case they do go ahead and propose this?
Yeah, so if you see, CCI seems to have pointed out 4 genres, Hindi GEC, Hindi films, and 2 regional, Bengali and Marathi. If I see what had happened in PVR's acquisition in multiplex DLF cinemas, they had told PVR to let go some of the screens in some of the micro markets where there was a high market share. So here also, there could be one option for CCI to see that in these few genres, how is the market share? Should I look at only TV market share? Because customer now obviously has moved on to OTT in a very big way, and there is Netflix, Amazon Prime, and whatnot. So I would say, yes, the one possibility could be, one scenario could be that some of these genres, the CCI may propose something, but this is completely in the realm of CCI, so very difficult to second guess. But that's one possibility which I would not completely rule out.
Avnish, just one question on this issue before we move on. Do you not think Zee should have disclosed it to the shareholders? Because the Competition Watchdog's letter, CCI's letter, came out on 3rd of August. And now, it's come to light only on 31st of August. If CCI had raised some concerns, would it not have been better corporate governance for Zee to disclose it to the shareholders before this?
So if you see, this is a discussion between CCI and Zee-Sony. And if you see this kind of a merger between 2 large players, to expect that CCI will not ask anything, I think that doesn't work that way. So this is part of the procedure, I would say. And obviously, there is sensitivity in terms of data, how you interact. There is a regulator, there is 2 merged entities, there's one entity which is unlisted. So I would say that this is quite routine that CCI will ask questions on the past data, but the data which CCI is referring is to FY21. So the world has changed in terms of, say, OTT because of the COVID also, and clearly Zee has lost market share. So I would say that, yes, in that context, I don't think there is any concern because you don't want to give a data which is very premature, right? As I said, in CCI, these kind of queries will happen in these kind of large mergers.
All right, let's now move on and talk about the good news which came through, which is the ICC media rights that they have won. So take us through how you look at this and how much of an upside do you see on account of this news that came through? Of course, they now have a big chunk of the cricket rights.
Yes, sir. So if the CCI thing wouldn't have come, hopefully Zee should have been in better stock performance today. But yes, coming back to this deal, it was very surprising, right? 2 rivals who are fiercely competing for the last 20 years. trying to work with each other in a small way. Why has Star done this? They are trying to reduce their concentration risk in one country, India, and in that market, they are trying to reduce concentration risk on TV because IPL rights are with Star, and similarly, digital rights of IPL are with Viacom. So, Star is trying to reduce its concentration risk, especially given the way macro is, especially given the way overall disruption in terms of consumption habits are changing. I think it makes a lot of sense. For Zee, clearly, it will address the missing gap in their portfolio. My sense is when you deal with BCCI, then the rights are very expensive. We have seen that in IPL, for example. But here, Star is entering into a sub-licensing with Zee. So I think for Zee, this will be a much more better deal. Strategically, huge sense. Plus staggered payment, as Mangalam highlighted, over a 4 years. So when the event happens, then you have to pay. And because these are World Cup kind of events, I think in terms of viewership, this will definitely help Zee when these events happen. So net, yes, it's good. Last point is Star sub-licensing TV rights. Does it mean that they are negative on TV? No, not really, because they bid for the IPL TV rights, right? So it is just a case of reducing the concentration risk in the portfolio.
Got it. And how would you map the impact on the P&L, both in terms of the benefits, revenues, advertisements, etc., and the possible costs over the next 4 years?
See, very difficult to say because we have just one number, $3 billion Star bid for these ICC, but that includes the digital TV and the women's properties also. So we don't have a breakup, so that's a challenge. But if I see, definitely this starts in FY24. So this is very early to really start building in numbers also. Also, we need to get a formal approval from ICCI, which seems to be more of in principle. But I would say that this will not be a big negative impact because that's a concern everyone has on TV rights when BCCI is involved. But this is not between BCCI and Zee. This is between Star and Zee, and Star is trying to reduce. So I would say that, yes, from a revenue and cost, difficult to give a number, but it is definitely positive for Zee from a strategic. But these are 4 or 5 properties over a 4-year time frame. So I would say the impact is more of a strategic rather than any big impact on the EBITDA level. Of course, the margins will be lower. So we will see some compression on margins for Zee when these things happen. But on a full year number, and hopefully if it's a merged entity, then the impact will be low.
All right, Avnish, then finally call on the stock.
So we have a buy on Zee. Of course, these issues are happening. There's a huge delay already in terms of exchange approval. But in terms of triggers, what we see is in H2, because commodity costs have corrected, FMCG companies, auto companies will come back in terms of advertising, a lot of the other discretionary. Also, NTO2, there will be more clarity in the second half. So these are the 2 triggers. The valuation is quite comfortable. But my sense is near-term overhang will remain till the CCI issue gets addressed, the NCLT approval comes. There is a near-term, definitely question mark, which we still are grappling with.
All right, Avnish, got it. Thank you very much for joining us. Like you